People.
All right, I've only got one question for you, and then I'm getting out of here because
people.
All right, I've only got one question for you, and then I'm getting out of here because this is your stage. But we set up Doge.
Yes.
How much do you think we can rip out of this wasted $6.5 trillion Harris-Biden budget?
Well, I think we can do at least $2 trillion.
Yeah!
Yes.
$2 trillion.
I mean, at the end of the day, you're being taxed. You're being taxed. All government spending is taxation. So whether it's direct taxation or all government spending, it either becomes inflation or it's direct taxation. Your money is being wasted, and the Department of Government Efficiency is going to fix that. We're going to get the government off your back and out of your pocketbook. And America's just not just going to be great. America is going to reach heights that it has never seen before. The future is going to be amazing.
The great Elon Musk. Well, there you hear it, guys. He wants to cut. He says he can pretty easily cut at least $2 trillion from the Harris budget. Now, you may or may not know, at least in 2023, the numbers that are out, the Department of Treasury printed up $6.1 or $6.2 trillion. So a budget of $6.5 trillion, which is what Harris is proposing, sounds about right to me for what's been going on. $2 trillion cut to that is a 30% cut. We need a lot more, but hey, guys, that is a step in the right direction. That is a step in the right direction. If we are able to get that, that is just massive. That's massive. This right here, this is, let me just play this. This is Trump's new ad. Of course, he was on fire yesterday at Madison Square Garden, but this is worth watching as well.
When I first came into office, I cut taxes more than any other president. We have created 7 million new jobs, and it led to a growth like we've never seen before. We developed the greatest economy in history by far. When I left office, it changed. Inflation destroyed the lives of so many people. Interest rates went from 2% to 10%. Millions of illegal immigrants, traffickers, and drugs coming into our country. Our country has gone to hell. So I made a decision to run. We're going to make America great again, greater than ever before. I will fight for you with every breath, and I will never let you down. I'm going to fight like a G and all go see. And if I die, I'm going to die free.
President Trump is literally putting his life on the line, and he's willing to risk it all because he loves this country.
He is strong, he is fearless, and he is what this country needs right now.
Our cities will be safe, our streets will be clean, and our border will be secure.
We can't allow our country to be destroyed by politicians who will put their own power ahead of the interests of the American people, our freedom, and our future.
The left told me to hate Trump. When you cut through the lies, you realize the truth. American families were better when Donald Trump was president. We were safer, wealthier, and stronger.
So if you love this country, if you want to stand up and fight for the future of our nation, you must re-elect Donald J. Trump.
Madison Square Gardens yesterday. I mean, it was like it was on fire. It was on fire. I mean, we have never had a movement. Now, actually, Ron Paul had a movement as well, but they were able to shut it down. But Ron Paul had a movement when I was a kid that was similar. It was similar. But nothing really. I mean, this is just above and beyond anything that really we have ever seen. I don't know. I mean, ever really unbelievable movement. Donald Trump has inspired people around the world. It's far from perfect, that is for sure. But neither are you or me. So here we go. We got the man. We got our fighter, Donald J. Trump. Cutting $2 trillion from the budget is massive. Remember that central banking cartel, the Federal Reserve, which is their favorite, the U.S. dollar is their favorite tax instrument. They have total, complete control over it. That is their favorite tax mechanism. That's how they that's how they take all your money. That's how they take it all. And so you have when you take $2 trillion, they're going to make 3 to 5% off of every dollar that they print up. So $2 trillion. That's a lot of money. That's a lot of money. What's that? 30 to 50 billion per trillion, I believe. Okay, if I'm doing my math on air, sometimes my math on air is rough, but I believe per trillion that they print up. So it's a lot. It's a lot of money, and all they're doing is printing the money. They don't have the money. Actually, they don't have it. They're just fronting the paper and taxing us on the back end. And that was the good thing about what Elon said there. A number of good things what he said, but he said that is what you're getting taxed on. You're getting taxed on what the government spends. Now you're also getting taxed on, and he doesn't cover this, but I do. You're also getting taxed on everything that they print, because see, the Federal Reserve, the central banking cartel, doesn't have any limits on how much money that they can print. They have total carte blanche of whatever they want. And so they can print whatever. And that's why you saw even Janet Yellen coming out and saying, well, the U.S. is going to give the U.S. give $20 more billion to Ukraine. And everyone's like, well, how does she decide that? Well, they get to decide. They have the monetary policy. They have complete control. But here's Janet here. Watch how when they talk about the dollar, the seal falls off. I mean, this is like God's hand right here. This is pretty interesting. Watch this. Listen to the question.
And over a longer time horizon, how concerned are you about the potential impact of the dollar's status as the world?
Let's watch that again. How concerned are you about the dollar status as a reserve currency? Watch.
And over a longer time horizon, how concerned are you about the potential impact of the dollar's status as the world's reserve currency?
Yeah, watch that one more time. This is like the hand of God here. Watch the seal.
And over a longer time horizon, how concerned are you about the potential impact of the dollar's status as the world's reserve currency?
Of course, we have the BRICS summit as well. The BRICS summit was last week, major success. I don't expect the powers that be here. Now, if we get Trump in, it'll be interesting to how it all plays out. But I don't expect the powers that be behind the dollar, which is a lot of power, for them to just lay down and let BRICS as a currency start. So that's going to be pretty interesting. We're probably going to see a lot more wars as that pushes through, because having the U.S. dollar as the reserve currency, it basically gives backing to the dollar. And people have to buy the dollar in order to do certain things. And if they don't have to buy the dollar, then we're really, really in trouble. Then we're really, really in trouble. It is coming, though. I don't think that there's much that can change it. I mean, right now it's fine. I mean, our fine is a relative term, but we are the reserve. The U.S. dollar is the reserve currency. I also wanted to just play this because it was fairly interesting. And since I'm on the topic, and I have Matt Dixon here is entered as well, so I'm going to bring him on here shortly. But this is let's see here, share this tab instead. And we're going to talk about this, I know, because of course they're talking about lowering interest rates, of course, which is good for you because things won't cost so much. You go buy a car, you go to buy a house, the money's not going to cost so much. But with inflation being out of control, because they're printing up so much money that they're printing up so much money that they need those interest rates to be higher. But anyway, this is what is going on here. This is what they're doing. This is pretty revealing.
You simply flooded the system with money.
Yes, we did.
So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digital.
Flooding the system with money.
Yes, exactly.
And there's no end to your ability to do that.
There is no end to our ability to do that.
So you work for your money. You work hard for your money. This is what I try to get through people's head. You work hard for your money, and they just print it. Are you sick of being a slave yet? You work hard for your money, and they just print it. Okay. Today's title, Musk aims to cut $2 trillion, 30% of the government spending as Dems lobby to raise taxes. Trump wows at Madison Square Gardens. Markets mostly up as oil takes a nosedive. Iran promises retaliatory strikes after Israel's strike, but for the moment, the markets don't care. And the Fed. Let's bring on the great Matt Dixon. Sir Matt. Matt, how are you?
Good morning. Fine, thank you.
Good morning.
Interesting, that Janet Yellen thing. These signs, they're signs, and it's just...
These are signs, my friend. It really is like, whoa, okay.
Just shows. Yeah, amazing. So, that Israel, obviously Israel, they made their strike as expected. We saw, over the weekend, we saw the crypto markets hit. They tumbled a little bit over the weekend. We saw Solana go from, I think it was 178 down to 163 or something? 160. I think it's even lower, 160 even, I think. Quite a tumble, but they're recovering because it seems to have been a clean strike that Iran says, it didn't hurt. Israel said they're successful, so everybody's a winner at the moment. So who knows what will happen next?
Yeah.
Hopefully things will calm down a little bit.
Not much, Rick.
Yeah. So I'll jump into sharing my screen. We've got there's quite a lot coming on. We had those, obviously Israel was one of the three big risks. We've got interest rates coming up and we've got the election coming up. So lots of risk on the horizon, but the market's enjoying everything at the moment. As you say, oil took a dive because no major impact.
Right. So, that's the cheapest I've seen. That's the cheapest we've had oil since the show started, I think.
Yeah. I'll double check on that in a minute where we're at. But so here, I trust you can see my screen.
Yes.
You're talking about what's going on with the US dollar, money printing, et cetera, et cetera. So we've got quite a lot of data. I'll just skip through a couple of my X posts, but this obviously is looking at the yield inversion. In fact, the uninversion of the yield curve, which is basically where long-term rates again skipped higher than short-term rates. And that normally happens. You have inversion of the yield curve is a sign of recession coming. And then when your recession's imminent, they start to lower rates. So you get the uninversion of the yield curves, the lower short-term rates, and then long-term rates then start to tip higher and you get the uninversion. And that's normally what happens before recession hits. So that is exactly what has happened. So that's the uninversion of the yield curve. I'll just move forward and show you the actual impact here. So this is odds of recession. Quite interestingly, the Fed have said there's a 56% probability US will enter recession by July 2025. Now, that's the Fed themselves. So they want to be, they're supposed to be managing the economy, but they themselves say 56% chance. I understand others have said there's a much, much higher chance of entering recession. we can see every time that rates peaked previously, shortly after we get recession, the grey areas here are recession. And we can see shortly after they peak, you get recession. We can see we peaked.
And that was by July, of next year. Recession by July, is what you said?
That's what it's saying. That's what it's saying. Recession by July next year.
Yep. Okay.
So it may well be much earlier. We'll see.
Yeah.
We've already started to see rates dropping dramatically. So the Fed clearly a little bit concerned. And that's what I'm going to just bring out today, hopefully, as we go through the various charts. So Fed are clearly concerned. They're lowering rates. And, you could ask on the one hand, why they're lowering rates. Let's just move on. I think I think I might just go to the, I'll do it kind of in reverse. So this is just current fear and greed. Looking at the current situation, this isn't long term. This isn't really looking at recession, but it's Bitcoin fear and greed index. We can see we're in quite a high greed situation, but there's plenty of room for more greed. And actually, you normally only see reversals when you get extreme greed. So that's why market's feeling comfortable, a little bit greedy. Everyone's piling in. That's pushing Bitcoin higher at the moment. As it continues to go higher, probably that index will increase. So last month we had an average greed reading of 64. Right now it's 72. It was 74 yesterday, but we're relatively extreme greed, but there's plenty of room for more. So things are looking pretty rosy at the moment on the fear and greed index. So as we go up, we've got US GDP figures due out tomorrow. Now, again, things are looking relatively rosy at the moment. They're expecting 3% growth, annualized growth. That's pretty good. And it's kind of points towards maybe soft landing. So you would ask the question, I guess, why are the Fed why did they reduce by 50 basis points? Why are they looking to reduce again by 25 basis points when growth looks pretty good? Not too much, not too little. It's Goldilocks scenario. So that's the growth situation is looking reasonably good at the moment. And then as we filter through and look at other data coming through, I think this is actually due on Halloween, these numbers, PCE. I think it's PCE on Halloween. Yeah, it is actually, Halloween, so 31st, end of this month. So you can see here that we've got PCE actually accelerating again, or the expectations are for PCE to start picking up. So there are signs that inflation is picking up. Personal income is picking up quite dramatically. So there are inflationary signs, and yet the Fed are reducing rates. So you can see they're really caught between a rock and a hard place. They've got inflation still above target and increasing, and they've got personal income increasing. So these are all inflationary pressures, and yet they've got other things telling them, like the bond curve, and even we'll see it on jobs figures in a minute. Unemployment is ticking up. So there's really mixed figures, which is giving the Fed a hard time, but they're taking the growth more seriously than inflation. And as Bruce is always saying, inflation is one of the big problems at the moment. Everyone's struggling with higher and higher prices. So are they actually, doing the right thing by effectively reducing rates, allowing inflation to go even higher? And we can see here inflation is ticking higher, and they're reducing rates, which will make inflation an even worse problem. So are the Fed managing the economy in the right way? And what they're doing, they're boosting all these risk assets to new all-time highs over and over and over again. It's just maybe storing up more and more trouble for the future.
And that's they're flooding the system with dollars. Exactly what they were saying. And that was those interviews were like years ago. They were over a year ago for sure. Flooding the system with money. Well, yeah, that's what we're doing.
Yeah, that's exactly what happened. The money has to go somewhere. It's gone into risk assets. It actually enriches the rich and not the poor, because the poor are suffering with high inflation. The rich,
which means more taxes, high inflation. That's where they're getting the money, basically. For layman's terms, the high inflation means they're taking the money from the poor, and then it's going to the wealthy.
Yeah, precisely. Yeah, so not ideal.
Not ideal.
Yeah. And then we've got non-farm payroll due out Friday, Friday the 1st, I think. So here, this is why the Fed, I've asked over and over again, why are the Fed reducing rates? Well, this, I guess, is their reason for reducing rates. That we see a sort of trend here, non-farm payrolls, fewer and fewer jobs, effectively. So the job situation is getting a little bit worse. And this is what the SARM rule is based on. Remember, the SARM rule has never been wrong in the past 65 years or so in predicting recession to come. And the SARM rule is based on employment or unemployment figures ticking higher. And that appears to be what's happening. The unemployment rate is expected to stay, I mean, it's ticked up to 4.1%, which is, it is ticking higher, and we can see the employment figures getting worse. So this is probably what the Fed are concerned about and why they're reducing rates. But they're reducing rates in the face of high inflation. And this, as we said, is actually hurting people. And it shows the underlying cause behind all of this has been the money printing. So what they did in the past is actually the cause of the problems that they're facing now with mixed data, that they're not able to make, I don't think, sensible decisions based on that. So I think that's taking us pretty much back to where we were. I just thought I'd touch on this Tesla. We've seen a massive Tesla price rocketing. They had some good figures out. Actually, revenue came out. If we just click, well, it doesn't matter. But basically, revenue came out pretty much in line with expectations. In fact, revenue was a fraction below expectations, but earnings per share was much, much higher. So I guess Tesla are doing a great job in reducing costs. So earnings per share were much higher than expected, and that's why we got this massive pump in price for Tesla. So yeah, that's nice for those. I know a lot of people believe in Tesla, believe in Musk and his policies, you know, with the way he runs the companies. So yeah, that's one of the real standout successes, I guess. So yeah, I won't go into that. We'll just dive into the markets, I think, to show where we're at. I'll go into my favorite, which is Solana at the moment. Again, I think we can see that there's a long-term trend line from what I've labeled as the end of wave 3, which was this local high of $209. We've been chopping sideways ever since. And I think we're probably set to continue maybe with another leg down before we push to higher. And I think we'll get higher above this wave 3 at some point. But I think at the moment, clearly we've got a trend line here that's shown by, again, if I open that out, probably we'll see better. Why I've drawn a trend line in there from the two pivot highs here and here. So we may possibly reach up to there, and I think we probably will. That's around, I think, the 182 sort of area for Solana, but I think we're potentially close to a reversal. And if I open this out even more, we've got all sorts of divergence here. So we've got here clearly higher highs on RSI, and we've got lower highs on price. That could be eliminated if we push, you know, quite a bit higher on price. But at the moment, we have divergence in place, and this is basically hidden bearish divergence that we have in place here. Hidden bearish is telling us of lower prices to come, a continuation of this downtrend move that we've seen. So that's what the expectation is at the moment. So I'm very, very cautious on Solana, and that probably carries through to most of the assets. But we will just take a look at dollar index, because Bruce has talked a lot about dollar. We can see that we potentially pushing down. The reason I think it pushed down from this point here, if I open it out a little bit, probably best to go onto a shorter time frame on daily there. I'll go onto the 4 hour. Probably shows it a bit more clearly. So we can see we basically had a double top. We can just see it there. So double top. We've also had two levels of divergence here. So we've got here, we have a regular bearish divergence from here, which gave price down. We've got another regular bearish divergence over the shorter time frame, which again gave us a downturn in the dollar. So I think this is why we've still got assets pumping. But although the dollar, I think, longer term may have some problems, don't forget, when there's real trouble in the world, and I still think there's a lot of trouble brewing, then initially people do flock to the dollar. So I do think that we probably haven't seen the end of this dollar rise, but short term, we may get a bit further of a move down in the dollar. Probably
what time frame is this chart on?
This is on the 4 hour, so it's relatively short time frame. But the divergence occurred from here, from the 4th of October until well, that divergence was from the 4th to the 24th. So that was over 3 weeks. We got that divergence. Then the latest divergence was 24th to to the 27th, so just a 3-day divergence there, but both basically showing regular bearish divergence, expecting the dollar to fall, which is precisely what's happening at the moment. So long term, long term, we might expect, you know, some weakness of the dollar, but as Bruce says, at the moment it's still the world reserve currency. Everything's priced in dollars. When there's trouble in the world, people still flock to the dollar for safety. So sort of medium term, I think there's potential for dollar to go quite a bit higher, especially as the world economies at the moment, the US is still relatively robust with growth, as we've seen, and this is the dilemma the Fed have. But things are not in such a good situation, for example, in Europe, in UK, in China. They've got real problems with growth. China's doing their best to stimulate the economy. Europe have reduced rates quite dramatically. UK reducing and reducing further. UK have got big problems with trying to basically raise spending, raise taxes. You know, they're going to raise taxes massively and try to spend money on on government, which is exactly what Bruce was saying. Spending money on government is not the way forward because it doesn't make profits. Yes, it may keep a few people in jobs, but they're not productive jobs. They're more like red tape administrative jobs that don't actually create anything. They don't produce anything. What we want to do is increase real, genuine productivity, and that's not spending money on government. So this is
the truth is it's harder work. Like, I get it. People want their government job. They don't have to work hard. I mean, everybody knows it. You don't work hard, and people don't want to work, so they really like those government jobs. But we're at a point where, you know, this whole thing is going to come crashing down at a certain point. We have to cut this. We have to cut.
I mean, you can see, for example, with the likes of Tesla. I mean, that's an amazing example that we just showed Tesla. Tesla got really good revenue numbers, but actually slightly below expectations on the revenue. But earnings per share were way above expectations. Hence, it's more profitable. It's actually more productive. It's, you know, this is what we want, productivity, and that's what that's what this is all about. But then with government jobs, there's no incentive to have. Well, there isn't such a thing as productivity, really. Government.
It's like, I mean, it's a joke. I mean, I've done a lot of, I still have contracts, and, you know, you sit around and you wait for people to do stuff, make charts, and like, I mean, yeah, there's work that goes on, but I mean, it would never fly in a company setting. The stuff
so effectively, and again, this is a bit derogatory, but effectively, you're paying people to shuffle paper rather than actually make things.
Right.
Produce things which are actually useful to people. They're just
doesn't mean they're bad people. Okay, we're not saying people are bad or anything like that, but we're at a point in our life and in the countries and in the world where we gotta make some changes.
Yeah. So here's just jump into oil price. We saw a massive gap down oil price, and that was basically because the Israel thing. You know, initially when Israel struck, there was a bit of a tick up in price, but then they saw it as very effectively pain-free, it seems. We don't know the whole truth of the matter, but Iran said, as I say, it didn't hurt, no big issues. Israel said major success. So hopefully a reason for de-escalation. So you see oil price dropping dramatically. And we have heard that Saudi Arabia are looking to actually increase oil production. So you've got both supply and demand metrics are in favor of reducing oil prices at the moment. So I'll just flip into longer term mode here with oil prices. Wow, look at that. Just look at that daily candle. Massive red daily candle there on the oil price.
Boom.
So it's looking.
Well, you know, you probably had a lot of guys that were long. You get the market makers there. A lot of guys that were long thinking, okay, you know, Israel is going to hit and this thing's going to go ballistic. And then that was, there you go.
Yeah. So again, it's a little bit of buy the rumor, sell the news kind of thing. So obviously, in anticipation of Israel striking, then the oil price was supported a little bit. But when Israel strikes, then you get the big sell-off. So you'd think Israel actually striking might cause a pump in oil, but no, it's the very opposite. So that just again supports that buy the rumor, sell the news thing. Again, when the Russian-Ukraine war actually started, we had this massive pump up in oil prices. But after it started, we got the beginning of the fall in oil. So again, it just shows buy the rumor, sell the news. So let's see what happens with the interest rate reduction. Let's see what happens with the election results. could be a bit of a surprise in markets short term. So whilst markets are pumping now, I think it's a buy the rumor, sell the news event. So when the news actually comes out, I think we may well see that reversal that I'm talking about. I've talked about with Solana. I've talked, the signs are there with the divergences. Dipping into Bitcoin, it's pumped really nicely. Again, looking like, from the all-time high here, this all looks corrective. I still think the movement up here is corrective. We can see this kind of choppy movement down was corrective. I also think the choppy movement up is corrective. So I still think there's another leg down to come. And I think it'll be a buy the rumor, sell the news event. So when the news comes out, we'll have all those three uncertainties out of the way. The election uncertainty. So whoever wins, markets hate uncertainty. So once there's some certainty there, they know what they're dealing with. That's actually a good sign. The markets can then, will do what they do. So, yeah, again, buy the rumor, sell the news. So I think that, and as I say, the interest rate decision, they'll probably reduce rates by a quarter. And we'll see what they signal, because they'll probably signal what whether they're going to do another rate cut or not. It'll be very, very important once again. These have been really important rate decisions because there's still a lot of uncertainty hanging over the markets. We've got all these data points I mentioned, PCE, we've got GDP, we've got unemployment, jobs data, all sorts of data that's going to swing the decision-making process. So very, very important data. Everything else is looking reasonably stable. It's a mixed day today, nothing particularly happening. I do think that as I say, there's not a great deal going to happen. The market's just climbing a little bit, but they're waiting for the news to come out. It's only next week now. So close to all these big events.
We're like, it's crazy.
Yeah.
I
again,
still don't know what to expect.
Looking at SPX here, quite interesting chart on SPX. I measured this wave up to here. I transpose it to, maybe it's further back. Let's just have a quick look. The previous big wave, actually, I'd measured up to there, transpose it to here. So 100% extension would take us to 6,100. I've said for a long time, I actually think 6,000 is a major sort of line in the sand for SPX, for the S&P 500. And we do already have this regular bearish divergence in place. So we already got it in place. It could extend further, but it's quite a big divergence here. So we could extend further, but I still think divergence will still be in play right up to around that 6,000 level. So maybe we'll push higher. Maybe this divergence won't cause an immediate reversal. So far, it has actually begun a reversal, but it could potentially extend a bit higher. But we have reversal signs in place. Got 100% extension just a little bit overhead. 6,000 area is a big psychological area. So and then the other thing is, we've got this very simple indicator, the simple moving averages here. So we've got a crossover to the moving average here, showed us a move down in price. We've got a crossover, and probably hopefully see these lines here. So this line and this line. So when the short term crossed below the long term, it caused a down move in price. When the short term crossed above the long term, it caused this big up move in price. Now the short term is still way above the long term, and it may be a little bit longer before we get it crossing below. But when it crosses below, like it was a signal back here and like the reverse signal here, it should likely signal a downturn in price. So we'll get a confluence of indicators showing a potential downturn. They're beginning to line up. If we want to get that short term crossing over the long term to the downside, then that would be a signal that the decline has begun. So I do think that things are beginning to line up. So we've got all these things, recession coming, the interest rates, the election, we've got indicators, we've got divergence, we've got moving average crossovers, we've got Fibonacci extensions. Everything is lining up. The jigsaw pieces are falling into place. So I think we are headed, 2025 is going to be a real year of volatility, I think. This can be great from a trading perspective, but if you're long the market, it's time to consider your positions, maybe take profits. If you've been in these markets long term, maybe think about your gold situation. Again, we've seen gold taking a bit of a short-term sell-off, but gold is a great hedge against uncertainty. They're still there or thereabouts all-time highs, but I think gold is an important part, a good cornerstone part of any portfolio. But even gold, we are seeing divergence in place here. So I'll just draw the divergence. I'll get rid of this Fibonacci just so we can see it very, very clearly. Again, gold we see here, by the way, very nice little indicator. We see the moving average here, short term crossing above long term, signaled to buy into gold all this time back, you know, when it was 1900 or somewhere around there, 1900 odd. It's now 2,700. So we got a very simple indicator saying buy gold. Just follow that and it's there. But we also have things like divergences. So I'll just put the divergence indicator in. So let's look at the high on the RSI to where we are now. We can see clearly RSI is declined. So we've got lower RSI peaks and the corresponding price peaks. Well, even if we go from here, it's probably easier. If we go from here to here, I'll just move that from there to there. So you can see we've got basically corresponding lower highs in RSI, higher highs in price. That's telling us of regular bearish divergence. So I think even with gold, we're expecting a bit of a reversal at some point. So longer term, I think gold probably still has higher to go. Actually, the same with most of the other assets. I said short term, we should get a pullback pretty soon. I think gold will also get a pullback pretty soon, but it should just be an opportunity to add to your position. So what I would probably say is don't chase prices higher, buying at all-time high. Wait for a pullback, and that might be a good opportunity to add to your holdings, dollar cost average, as we say, and just add to your holdings and look to potentially jump in for some, but maybe a higher price from a lower price. So I think gold is another great opportunity, but an opportunity in waiting in the wings, waiting to jump in. So pretty much that's it for today, I think. Hopefully gives you a clearer picture, but just telling you there's a bit of risk on the horizon. We're so close to the election. I think we may well get a bit of a reversal ahead of the election because it's uncertainty as we're getting very close to it. But I wouldn't be looking really to take any particular positions at the moment with the interest rate decision and the election coming next week. And maybe Iran might do some kind of retaliation. It's tit for tat all the time. So who knows? So,
yeah.
So looking reasonably good longer term, but short term, I think there's challenges ahead. So just be careful in these markets.
Amazing.
So thank you for that, Bruce. Thank you everybody for listening. Looking forward to give you another update tomorrow and see where we go.
Awesome. Thank you, Matt. Great report.
Great. Thank you, Bruce. All the best. Bye for now.
Cheers. Great. Matt Dixon with the Market Watch report. As you see, things are looking at the moment, they're looking pretty good. So could go higher. And then we may have a buy the rumor, sell the news. Really, whoever wins the election, we could have that buy the rumor, sell the news type of event as people then look to take profits. Everybody, why do you buy these things, right? You buy these things for profit. And then at a certain point, people are going to want to take profit. So, but if you follow the signals and everything else, you will trade very well. I can tell you that my trading is up a lot since we started doing the show. I've been doing much better, trading much more disciplined, and it's made a big difference. I did have a couple of comments from that have come in on my X feed that I wanted to share here. Let me just share my tab because they're interesting comments. Let me see here. We go. Boom. Bill Griffey says, what will all those crooked politicians laundering money through left-wing NGOs do? And this is, of course, if Elon is successful in cutting 30% of the budget. And he's right. What will they do? And I responded and I said, that is why they're fighting it so much. That's why they're fighting it so much. 30% reduction is pretty massive. It's massive. That's big. Now, he has floated 70% before. We really should go for 90%, which is what he did with X or Twitter. But I don't think he wants to scare everybody. So he's going to, stick with these numbers. 30% sounds like, oh, well, that's not too crazy. So let's talk 30%. Hopefully we get 60, 90. All right. Hopefully we get 3x that. Come on, Elon. You've 3x'd us before. Let's do it again. I'll tell you what, when he started buying Doggy or Dogecoin, no, that was really something else. And if he's successful in getting the Department of Government Waste or whatever he's calling it, DOGE, Doggy, and that's going to send everything to the moon too, I think. Not financial advice and all that jazz we're supposed to say. We get paid to do this stuff, okay? Another comment that we got here off of X says, if Musk is successful in cutting 30% of government spending, this is from Odie Baby, 30% of government spending, I predict the impact on the taxpayer will be zero. Too much fat. Don't raise taxes. Reduce the bloated government. Well, $2 trillion off of the budget is a lot. I think that we will fill that, but agreed, it might not be as much as people think that it is. But certainly, yeah, I mean, you may be right. You may be right. We won't feel it too much. Probably the biggest place that we'll feel it is inflation. It may not be in tax cuts per se, but we'll see. Well, one of the things I think we should do, and I talk about it sometimes, is we should just tell these guys right here that, take your $35 trillion and yeah, we're going bankrupt. Okay, that's all. That's it. We're not giving you 35 trillion, and we want our gold back. How about that? You give us our gold back, and we'll print up some more money to give you. Actually, Kim.com came up with a fairly clever. It's not clever, really. I mean, it's been talked about it quite a bit, but he says just print up 35 trillion, plus the interest, obviously. It says print up the 35 trillion, pay off the Federal Reserve, get off the dollar, and say sayonara, baby. Yeah, that's really the deal. I will say, everybody, I talk about it a lot on the show here and there, but these truth tellers out there, if they're saying things that you think, oh no, don't say that, or this and that and the other, take a second look. If the truth tellers, if Kim.com, if Candace Owens, if the Tate brothers, if Dan Bilzerian, if all of these people who are the truth tellers, who have been the truth tellers, myself, are saying something, and you think, oh, that's not right or something, take a second look. Take a second look at what we're saying, because quite possibly you're missing something, or maybe it looks a little different if you take a step back and you look at it. And everybody's in their own little world, right? Everybody's in their own kind of microcosm of what is going on, and it's hard to see everything, right? It is hard to see everything. Is it really possible? We have some more comments coming in here from Desiree, my friend Desiree here. Sweet Desiree. Desiree's changed her profile pic. Desiree, is it really possible for us not to pay taxes and survive on tariffs, Bruce? Absolutely, 100% it is. Now, here's the deal. We used to, back before the central banking cartel took over the country in 1913, we were all on tariffs. And when the Federal Reserve, when the banking cartel took over, of course, they have their system. They started the IRS and everything else. It was hand in hand. So the Federal Reserve is basically the IRS is theirs, okay? And so we used to, though, before that time, the government ran on 2% of the GDP, okay? So of what we produced, of the money, they ran on 2%. Now, since then, of course, with this new system of credit, it's a new system of credit that the banking cartel then loans the money all the time. That's the way it works now. Before, we got the money and then we spent it, but now that's not the way it works. The money comes in, it goes straight to the Fed. Government tells the Fed, hey, I want this amount of money, and the Fed gives it to them, right? And they can give money to whoever they want as well. It's not just the U.S. government. They can print it up and do whatever they want with it. Now, they were operating, though, before the banking cartel took over, at 2%. We're now at a 25%. Now, so absolutely, we can operate on just tariffs to answer your question, but not with the current expenditures. Absolutely not. But we can't continue at the current expenditures anyway. It will not work. It will collapse. It's what I've been saying for my entire career. Guys, this is going to collapse. This is not sustainable. This is going to collapse. I started saying, I'm telling people kind of a disclaimer. I have been saying that for 10 years, okay, which is, over 10 years now since I've been in Bitcoin. So I like to preface it with that, because what I learned over the years is that these guys have, basically, if you have the ability, the unfettered ability to tax 335 or 300 whatever million people, would you go bankrupt? Like, no, of course not. And so it's their favorite tax instrument. So why in the world would they let it fail? And the other part is, how can it fail if they can tax 300 million people as much as they want? Remember, they are operating above. They say independent. They say we're operating independent, but they're actually operating, independent, but they're operating above the U.S. government, above the U.S. Congress. They don't answer to any of the monetary policy. Every time that they print money, it dilutes the money supply, taxing you. They have the unfettered ability to tax us. We are nothing but slaves. And that's why I keep this guy on every day. He's presented a plan to end the Federal Reserve, to end the Fed, which is really what we have to do. We have no choice. Trump, I feel like maybe he's doing some 4D chess. Hopefully, there's a lot of stuff that he's doing as well. All right, man. You got my support, but all right. But hey, look, if we end federal income tax, these guys, basically their whole system is out. They're the ones who brought in the federal income tax. It's them. They're the ones who brought in the federal income tax. They're the ones who brought in the the IRS. That's how their system works. So when Woodrow Wilson sold us out in the dead of night, pushed through the Federal Reserve Act, okay, and we were sold out, the country was sold like a stock to the banking cartel. The banking cartel has told Woodrow Wilson and the rest of everybody, look, guys, you'll never default on anything ever again. We'll pay everything. Don't worry about it. And we gave them the unfettered ability to tax us, they gave it to tax us. Then they stole all our gold in 1933. Eisenhower did that by executive order, and they took all our gold, and they still have it. They're supposed to give it back. They still have all of our family's gold. They confiscated it, and they gave us paper dollars for it. They're the biggest scams, it will end. I promise you guys, it will end. I hope it'll end peacefully. I'm a big proponent of peaceful. That's why I said around the world, as speaking on stages around the world, talking about the monetary revolution. It's a peaceful revolution. There hasn't been a shot fired. It's a peaceful revolution. It's a monetary revolution. Get into gold. Get into Bitcoin. Get into assets that they can't inflate. Be careful. Ethereum, Solana, XRP, these ones, they can inflate them, they can seize them, they can freeze them. It's just like the dollar, maybe even worse. You make a lot of money with them, but that's one of the reasons you can make a lot of money with them, because they're completely controllable. Bitcoin, gold, Litecoin, silver, the one I'm involved with, Global Boost. There's other ones. A lot of these old proof of work, old currencies, they can't control them. They can't freeze them. They can't seize them. I played old Obama talking about that the other day. It's worth playing real quick again. Commie. He talked about how this is, here we go. Share this tab. I'll let him say it. Talking about Bitcoin right here.
Because if in fact you can't crack that at all, government can't get in, then everybody's walking around with a Swiss bank account in their pocket. All right?
So if you can't crack that, if you can't get in, basically, in layman's terms, if the government can't seize your money, it's bad. What in the world? Why? Like what? Like he said the quiet part out loud. It's worth listening to again. I mean, this is like, commie 101 right here. I mean, communism right here.
Because if in fact you can't crack that at all, government can't get in, then everybody's walking around with a Swiss bank account in their pocket. All right? Because if in fact
that is the point, Barry. That's the point, man. That's why I got involved. That's what Bitcoin's all about. And that's why it's political. That's why I always understood it's political. People used to tell me now, of course, politics and Bitcoin are all, Trump is front and center with the Bitcoin. Of course, it's a movement now. It's a worldwide movement. And they realized that they need to get onto it. But I always understood that Bitcoin was political. It was in fact political. Even though I didn't understand everything back then. I didn't understand everything like I understand now. And a lot of people understand it now because you have guys like me coming on every day talking about it. But I understood that we could take the power away from these people. And these people are bad people. These people are bad. They have enslaved us. They've set up a system of debt slavery. And they've enslaved our entire nation. They've enslaved most of the countries of the world with their debt system. And they enslaved our entire government. Our Congress is nothing but a bunch of prostitutes. Our Congress is just like they can't do anything without talking to their APEC guy or whoever and making sure that they don't upset these guys. This is the same people. Okay. Sure you know that by now. All right. I am going to play this video. It talks about the central bank. And then I am going to, let's see here. Hold on a second here. There we go. There we go. This is a short clip about the central bank. If you haven't watched it, you don't have to watch it again, obviously, if you've already watched it, rather. But it's worth watching. This talks what is the central bank, how it works, the big scam, how they took over, how they've raped us, and everything else. It's a very, very bad situation here. 6-minute clip. Watch it.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, 2 specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push once again legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged. Putting the pieces together a few years later, Frederick Allen of Life magazine wrote, "The Morgan interests took advantage to precipitate the panic, guiding it shrewdly as it progressed." Unaware of the fraud, the Panic of 1907 led to a congressional investigation headed by Senator Nelson Aldrich, who had intimate ties to the banking cartels and later became part of the Rockefeller family through marriage. The commission, led by Aldrich, recommended a central bank should be implemented so a panic like 1907 could never happen again. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support. And 2 days before Christmas, when most of Congress was at home with their families, the Federal Reserve Act was voted in, and Wilson in turn made it law. A world banking system was being set up here, a superstate controlled by international bankers, acting together to enslave the world for their own pleasure. The Fed has usurped the government. Now, the public was told that the Federal Reserve System was an economic stabilizer, and inflation and economic crises were a thing of the past. Well, as history has shown, nothing is further from the truth. The fact is, the international bankers now had a streamlined machine to expand their personal ambitions. For example, from 1914 to 1919, the Fed increased the money supply by nearly 100%. Resulting in extensive loans to small banks and the public. Then, in 1920, the Fed called in mass percentages of the outstanding money supply, thus resulting in the supporting banks having to call in huge numbers of loans, and just like 1907, bank runs, bankruptcy, and collapse occurred. Over 5,400 competitive banks outside of the Federal Reserve System collapsed, further consolidating the monopoly of the small group of international bankers. Privy to this crime, Congressman Lindbergh stepped up and said in 1921, "Under the Federal Reserve Act, panics are scientifically created. The present panic is the first scientifically created one, worked out as we figure a mathematical equation." However, the panic of 1920 was just a warm-up. From 1921 to 1929, the Fed again increased the money supply, resulting once again in extensive loans to the public and banks. There was also a fairly new type of loan called a margin loan in the stock market. Very simply, the margin loan allowed an investor to put down only 10% of a stock's price, with the other 90% being loaned through the broker. In other words, a person could own $1,000 worth of stock with only $100 down. However, there was a catch to this loan. It could be called in at any time and had to be paid within 24 hours. This is termed a margin call, and the typical result of a margin call is the selling of the stock purchased with the loan. So, a few months before October in 1929, J.D. Rockefeller, Bernard Baruch, and other insiders quietly exited the market. And on October 24, 1929, the New York financiers who furnished the margin loans started calling them in masse. This sparked an instantaneous, massive sell-off in the market, for everyone had to cover the margin loans. It then triggered mass bank runs for the same reason, in turn collapsing over 16,000 banks, enabling the conspiring international bankers to not only buy up rival banks at a discount, but to also buy up whole corporations at pennies on the dollar. It was the greatest robbery in American history. But that didn't stop there. Rather than expanding the money supply in order to recover from this economic collapse, the Fed actually contracted it, fueling one of the largest depressions in history.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.